This conference will now be recorded.
All right, well, so welcome to our psychology workshop. As always, everything that we're going to be talking about today is for educational purposes only and not intended as any type of investment advice. All right, so what I want to talk today is obviously psychology. That's going to be our main focus, but I want to start out with talking about 4 different steps and 4 different types of psychology that we have to understand first in order to be an elite trader. When I say elite trader, I'm not talking about, at the end of the day, making a few $100 here, a few $100 there. I'm not even talking about money whatsoever. What I'm going to be talking about is actually understanding what's happening and almost the exact reason for exactly why it's happening. Do we need to be on a couch? You could be on a couch, but I definitely would be taking some notes because this is really going to the reason that we're going to be doing this right now is this is really going to lead into our next round of classes. Our next round of classes is literally going to be just analyzing stocks in real time the entire time to really take into what we're going to be talking about today and understand the overall of what's happening out there. And not only the overall of what's happening out there, but how to actually trade it. Because knowing where a stock is going to go is half the battle. That's the easy part. It's really being able to trade it. So the first thing, there's really kind of 4 stages to getting to where you need to be as a trader to really understand what's going on out there. The first thing doesn't necessarily have to do with psychology. It's understanding a trading methodology. Okay, actually understanding how to trade. Okay, in our case, we use 1 through 4 with prints. Okay, we tape read. Okay, we use our ask prints, use our bid prints depending on the situation and all the other variables that come into it. Okay, we make a decision on where the stock is going to go from there, how far it's going to go, where we can actually set up a game plan. Now, once you understand 1 through 4, is it that hard to understand 1 through 4 and how prints are going to move, or how they should move is a better way of saying that? Is it really that hard to understand? No, right? I mean, not for nothing. You can watch the Hour Workshop a couple times and you should be able to get it pretty quickly. It's not that hard to look for ask prints and look for bid prints that stand out. Okay, so why is trading so much harder than that if the actual methodology itself is pretty damn simple? There's not a ton that really goes into it. Now, yes, there's a bunch of moving parts, and it's not as simple as I'm, really saying. But at its foundation, it is very simple. So that's the first part. We have to have an understanding of some type of trading methodology. I don't care which one it is. Okay, if you're not tape reading, you're using indicators, I really don't care. Either way, we have to have an understanding of some way to set up a game plan to be able to trade. Okay, so now the hard part comes in. So there's 3 other things that we're going to have to understand to really ever get to a point where we can just kind of see the entire picture. Now, the first part is personal psychology. Okay, what does that mean? That means understanding ourselves. Okay, this by far, in my opinion, once you understand a trading methodology, is by far going to be the hardest part of actually being a successful trader. Okay, and why do I say that? So, anyone ever go against a game plan they have set up? Has anyone ever had a game plan for a trade and went against it? Why? Why did you do that? So, Rich, money. 90% of the answers that I'm going to give you are it's going to be money. Okay, 90% of the reason is going to be money, but it gets kind of further into that because after money, once you're down, we've all been down that rabbit hole before where you just start over trading and just eventually get yourself into this big hole. It's not even money anymore. It starts to just become, this black hole that just keeps sucking you in. But really, the fear of losing money, it's all these emotions. It comes down to emotion. Okay, it's 90% money and 10% emotion, but all the emotions actually usually stem from money. So in order to really ever get to where we need to be, we have to understand ourselves and we have to set specific rules. Now, the easiest way to really take away emotion and actually, take away the human part of this is do what? What do you think is the easiest way to take away the human emotion part of trading. Sim trading, that's there's no question there, but unfortunately, that's never going to get us to where we need to be. A lobotomy. I'm sure we've all been there at some point where we honestly felt like we needed one. And there it is, okay? Solid rules and a trading plan. You have to take thinking out of the game. And one of the things about learning ourselves is trying to, you get to a certain age where trying to actually change yourself gets to damn near impossible, all right? A lot of people are going to have a very hard time just changing themselves, as a person. Okay, because a lot of our personal flaws, that's one thing that trading does on the personal aspect of things, the psychology behind who we are, it basically puts a spotlight on it. Okay, if you're impatient, what do you think happens with your trading? Well, you're going to end up being very impatient. Okay, and we could go down the list of all the different type of emotions and stuff that we have, but it's most of what about our human characteristics are going to carry over into trading. And really, instead of changing ourselves, the best way to go about it is really focus on a solid plan. Okay, you need to have not only rules, but you need to have boundaries. And what I mean by boundaries is, you have to have certain rules that are going to stop you and put you back to what your habit needs to be. For instance, okay, if you always take the trade in the first minute of the market and you're continuously finding yourself losing that type of trade, what do you think needs to be said? Yeah, you have to wait. Wait 5 minutes. See, the thing is that we continuously do things that carry over from our personal, who we are as a person, but we never stop it. And this is why so many traders have such a rough time, and they really, even though they know what they're doing, because remember, that's the first part, okay, knowing where a stock has to go. But that's really, at the end of the day, the easy part. So the best way to go about it is we have to, when those flaws of ours come out, okay, understanding ourselves. But that's the number one thing, is that we have to acknowledge them. And so many of us go through the motions. We don't want to be impatient. We don't want to be, whatever other type of emotion, that comes into it. We don't want to up our shares when we lose a trade to try to make money back. We don't want to do those type of things. But if it's ingrained into our character, what do you think's going to happen? We're going to end up doing them everywhere, anyway. So you're going to end up doing the things that you shouldn't do, because you're not focusing on them when they come up, and setting a boundary or some type of step in it to stop yourself from doing that. For instance, how many people, okay, have taken a trade without a trigger before? Every single person. I guarantee it. At some point, you jumped the gun and you went in. You took a trade that just wasn't there yet, because again, you know where the stock needs to go, but it just didn't show you its timing. It's impatience. Okay, you didn't let the trade come to you. You tried to force that trade. So what do you think we can do to stop that? What's a good way for us to psychologically stop that? So see, that's the thing, Ken. Okay, be patient. That's easy to say, but if you don't have patience as a person, are you going to be able to be patient? Just all of a sudden tell myself, be patient, and it's just going to happen. Probably not. See, that's the thing, is that it's so easy to say you have to be like this and you have to do this, but none of us actually sit there and think about what our personality flaws are, and set up almost a fail-safe to stop us from doing that. So if you constantly find yourself taking trades without triggers, that means that as a person, if I met you on the street, we had nothing to do with trading, I bet you'd be impatient. Rubber band on the wrist. Well, I don't think I could tell you to physically harm yourself, but as you guys know, that's what I did, because sometimes negative reinforcement really helps. But see, this is what I'm trying to say, is too many people, especially the older you get, the harder it's going to be to just change your characteristics. And it doesn't have to be like that, but you have to set up something. This is one of the keys that I've found with people that are successful versus people that kind of just tread water or end up failing in, within their trading, is that instead of trying to change their entire self, they implement certain things that need to happen in order to counteract their personalities. So for instance, if you keep finding yourself taking trades without triggers, okay, an easy way to start, to really kind of build a habit of getting better, because eventually if you follow these fail safes over and over and over again, what's going to happen to your patience level? What do you think is going to happen to your patience level? This is psychology. It's going to get better and better and better. But just saying be patient, is that going to work? Anyone have kids here? When you tell your kid to be patient, do they just instantly be patient now? Does it work that way? Has not worked so far. Because that's what I'm saying, it doesn't work that way. So what you want to do is you want to find a stock in a situation like that. If you keep jumping the gun, okay, for a period of time, because you got to remember something, but this is all a learning phase until it gets to a point where your habits are just built and it becomes second nature. This doesn't happen after a month, after 2 months. Okay, my learning phase was over 2 years before I really started to get with what I needed to know and really started seeing things the way that they are. Maybe build a plan around my weaknesses to help me. And that's exactly what I'm saying. So for this case, if you're taking trades without a trigger, okay, you might want to look at stocks that have a bigger range. All right, and wait, so you're able to actually wait for the stock and get in at a further point within the trigger instead of trying to jump the gun and getting in the second the trigger starts to happen. Because we've all been there too, where we get in way too, it looks like a trigger, we get in way too early. We don't actually let the trigger develop itself and show us if it's a trigger or not. This is why our journaling is so important, because our journaling, it's great to see when we have winning trades. Everyone loves to journal when it's a winning trade. But everyone literally hates to go out there and journal on a terrible day, right? Anyone ever lose 10 trades because they overtraded? Do you really feel like journaling your 10 dumb trades that day? It's human nature. Of course we don't. We don't want to relive it, so we don't do it. But that's the worst thing that we could possibly do. So do you see what I mean? So the first thing is the first part of really mastering how to trade is you have to learn who you are. And you have to build your way of trading. It's not that the way that the stock's going to trade is going to be different, but your way of trading it needs to be different. And it needs to be built to kind of counteract those weaknesses that happen. And by doing that, you're going to see that those weaknesses are going to start to go away. And then from there, you don't even have to think about it anymore. Now you can get back to trading, so for instance, when a stock moves, someone that's in their learning phase, no matter what, they start to see money. Okay, so they see money out there, they see that the stock's moving, okay, even if it's way too far above their level. Okay, we're talking about like an NVAX today that's moved $26. Okay, actually it was a really easy trade, but a stock that moves $26, it's very easy to lose $1 in a second. That's going to be above people's level, but they start to see that emotion that comes in. So you have to counteract that. You know that if you see a stock that's going to be moving like that, and it's above your level, don't put it up on your screen. Once you see that it's above your level, get rid of it. How many of you guys have got caught sitting there watching a stock that's too far above your level instead of looking for stocks that fit to what you can trade? Anyone ever do that before? Often. 100%. Well, so if it's slower to get the screen time on it, I don't disagree with that. But guess what? If it's 9:40 in the morning and you're watching a stock just because it looks cool while it moves, you're not doing anything to help yourself. Okay, so the first part of what we were talking about, what we're going to talk about today, is understanding that if we don't know who we are, we're not going to succeed. Because I promise you, no one is perfect. I know I'm far from it. Okay, there's no such thing as a perfect person. We all have character flaws that are going to come into our trading. And the only way to change that, we can't just write a Post-it note. See, what happens is if I write a Post-it note on my computer that says, be patient, What's going to happen after 3 days? So don't get me wrong, I love Post-it notes. I used to have them all over the place, but what's going to happen? Yeah, you don't even see it anymore. You literally, it's just something that's there now. It's almost like if you have, pictures on your wall in your house. Okay, when you first put them up, it's, you look at it all the time, and then all of a sudden it's just they just don't exist anymore. They're there, but you don't really notice it anymore. So being patient, yes, it's very easy to say that, but you have to build something within your actual your trading plan that's going to force you to be patient. And then by doing that, eventually your mind will learn how to be patient. Does that make sense to everyone? Trying to just change yourself drastically to fit how a trade, because then basically I could say right now, be a robot. Just be a robot. Don't have any feelings, emotions, anything. Okay, how many of you are going to be able to instantly just do that? It's almost impossible. You can't just immediately just change the entire chemistry of your brain. It can't work that way. Okay, our brain needs to be changed gradually over time. And how long does it typically take to do that? 21 days. Typically, if you follow that, so that it doesn't mean that you have to wait longer into triggers for your entire trading career. That's not what I mean at all. But what's going to happen is it's going to force you to wait, and after 21 days, it's just going to become second nature. And again, 21 days, that's not like a hard line number that 100% is 21 days. Might take some people a little bit longer, might take some people a little bit shorter. Okay, but that's really what has to happen. You can't try to change yourself all at once. And then eventually you become the trader you want to be by doing and by following exactly what I just told you guys. Does this make sense to everyone? Okay. So then the next part, market maker psychology. Okay. Well, again, is 1 through 4, understanding how a stock should move once we see prints. Is it that hard to understand? As we discussed before, not really. So now this gets into more of the trading aspect of it, because we have 2 parts left that really are going to change everything within our trading and go from being a decent trader. Because at the end of the day, guys, if you just follow the rules specifically for 1 through 4, can you be a successful trader? If you did nothing but follow the exact rules, 100%. The thing is, you're never going to be an elite trader, because sometimes 1 through 4 doesn't follow itself, but there's always a reason behind it. And the 2 other psychologies we have to understand is retail psychology and market maker psychology. So market makers, I want you to think about this for a second. I was thinking about this last night when I was kind of thinking about how we were going to go about this. And when a market maker is sitting at a table, who do you think they're following? They're sitting at their computer, okay? They're looking at their time and sales and stuff. Who do you think they're following? Retail. Isn't that interesting to think about? They're sitting there thinking about us. We're sitting there thinking about them. But an elite trader, okay, someone that's really going to take this far, is thinking about both aspects of things. It's a love-hate relationship. For instance, okay, retail, let's talk about retail psychology a little bit first, because then we're going to get into market maker psychology. Because at the end of the day, retail psychology is going to help us understand what a market maker is thinking and what they're going to do. Why, when a stock doesn't do, like, for instance, let's say we get great ask prints at 135 in NVAX and it goes all the way up to 145. Why is 145 a great spot to look for them to bring it back down to build? What's the reason behind that? Well, it's a major psych level, but that's just because that's what I've told you. But what's the psychology behind it? Yeah, retail loves to get in over strong numbers because they think they have a support there. So what they do is they bring it over it so then they can drop it down on them. Because the more retail that gets in, what does that mean for a market maker? Yeah, easier to get more shares quicker. There's more shares out there for them to actually take. Okay, so we have to start thinking about retail for the psychology behind a retail trader. What does retail traders love? What do they love to follow? Movement. Okay, the charts, movement on a chart. That is the number one thing that a retail trader is going to follow when getting into a trade, okay, is movement on a chart. Okay, so when we see that and we see movement on a chart, we have to understand who's sitting there waiting. Is a stock ever just going to go straight up? And this is what we're going to be talking about when we get into our classes, because obviously this isn't as much a trading class, it's more of a psychology class. We're going to go over a few basic things that we're going to be talking about next week. Okay, but yeah, we know that when a stock goes straight up, we have to start to understand the psychology behind what's happening, because we know that if the more and more retail that gets in, once it gets to a certain point, they're going to say they're going to pull it back. So now let's talk about what should the prints look like on a market maker side. Okay, if a stock, we know a stock that is going to make a big run at certain points is going to have large pullbacks. Okay, large, quick pullbacks. Why large, quick pullbacks? And when I say quick, I mean bars. I mean a big bar down, not just like a slow move to the downside. Why? What's the psychology behind that? There we go. It triggers retail emotion. If we just talked about, so retail, we know when a stock is going straight up real quick, like we could use Wish for this right now. Okay, when this is happening right here, okay, what is retail the emotional state? What's going on in retail's head right now as this stock is moving? Euphoria, happy, buy. FOMO, maybe. Well, I mean, if they didn't get in, if as it's going, dopamine, buy, get in. Yeah, these are all, you see what it is? It's all positive things like, oh, this is great. Now, when this happens, what now happens? Okay, we get that bar that comes down. What now happens to the emotional state of that retail trader? Depression, suicide. Well, let's hope it's a little bit less than that. Dreams are shattered. Well, so all negative, right? So insecure for sure. Insecure about that position. So what happens? Okay, so you got to think about the actual psychology, the what's going on in the brain, is you really actually are getting dopamine. When you're in a great trade, when you make a great trade, how do you feel? How do you feel when you make a great trade? You literally, it's like a drug. And the reason is it's because your brain is releasing a drug and it's releasing dopamine. Okay, you have that that great feeling of winning. Okay, so what happens is that when you see something like this that comes into it, okay, and then that bar that comes down, all that dopamine just disappears. The actual chemical reaction in that person's head disappears, which causes them to act, and which actually physically causes them to come and click the button to get out of that trade. Okay, I want you to think about it like this, the actual psychology, that breakdown. Okay, have you ever been in a trade before where you're up $1 or up a big amount? Has anyone ever been in a trade that they've been up a big amount? Okay. If you sell at the top, how does that feel? Feels great, right? Just sold at the top, I made, okay. So let's say I'm up $1, and that's because that dopamine stays. Okay, it's still, you're literally still riding that high. Now, what happens if you're up $1 and it drops 70 cents on you, and then you sell and still make 30 cents? How do you now feel? You still made 30 cents, but do you see how your brain literally changed? Okay, the chemicals in your brain immediately changed, even though you still want to trade, and you still were in the, still on the, in the black. Do you see what happened in your head? Those are all the chemicals. It literally robbed you of your dopamine. Wow, psychology is much more powerful than I originally thought. I'd see. This is the thing. I don't really recommend trading books, but I have recommended a bunch of psychology books, and this is the reason, because when I say get into their heads, I literally mean the understanding what their head is doing. And this is the thing, is that after that 30-cent trade, okay, if a stock bars down 70 cents on you, is there anything you could do about that? If all the prints matched, everything said, it was perfect, and is there anything you could do? Because guess what? Everyone's going to go through it at one point. It's just something. Sometimes it just does something real weird that it didn't show it was going to do. Guess what? That's why there's no 100%. In trading, there's no such thing as 100%. You could have a 99%, but there's always that 1% chance that anything can go out there and can happen. Okay, so when I say get into their head, I'm literally, the way I think of things and when I see is it goes into what's actually going on in their head. Because what's going on in their head, is it different for everyone, or is it pretty much the same? Almost most people, I mean, besides, unless you're like, a serial killer or that type of person, most people are pretty much wired almost, their brains are wired almost exactly the same for the larger part of people. That's why we're not robots. That's why so many people fail at trading, because market makers know this. They know how your brain is going to react to what you see, and they know how to manipulate your actions by movement on a chart. Isn't this crazy? Think about that. How many of you guys, and I guarantee it's 100%, have said it feels like the market makers are sitting behind me because every time I do something, it's like they knew, and they goes the opposite. Serial killers make great market makers. That's true. But who's had that thought before, especially in the beginning? Exactly. Are there cameras in my room? How the hell do they know this? Because they've studied the psychology of a normal human, of a trading human. And then you have, certain people that are kind of fall in the middle, but then you have the gamblers. Gamblers are the easiest people to take money from because they pretty much will do anything that, that the chart shows them to do. And that's why I don't emphasize charts much, because if you get caught looking at the chart, what's going to end up happening to you? It's a real quick way to fail. Everything every move that happens on the chart is literally set to happen for a reason. Unless the stock just stops trading and it's just kind of dead, because then, then anything could, it just kind of moves. But a stock that's actually trading, all right, everything that happens for a specific reason, a specific game plan. And we have to understand that. 45% chart, 55% tape. Now, the thing is, once you know what's on the chart, do you really need to look again? I mean, that's about 80% chart and matrix. So chart, time and sales and orders, and about 20% the chart, because there is information that we need on the chart, like our increments. We need to know what its average volume is. We need to know, a few different things, from there. But once we kind of know what's on the chart, like, does everyone remember? And if you haven't watched this yet, go back to, it was probably not last classes, but the classes before. I taught an entire class without the chart up, right? Okay, did we need a chart for it at all to understand where the stock was going to go? Nope, didn't need it. And the reason we didn't need it is because this tells us everything. This is what's painting this picture. So if we focus over here, guess where we're not focused? What really matters: the actual buying and selling of the market. The market moves because supply and demand. Does the chart show supply and demand, or does it show an afterthought of it? Shows what happens after it actually happens. The thing about prints is that most prints that we're going to see, especially the bigger prints, okay, the actual move that's going to happen on the chart is delayed. This happens first, and then what this tells us, that's what the chart's now going to look like in the future. And do we want to know what the chart looks like now, or do we want to know what it looks like in the future? Well, obviously, once again, the name ahead of the charts is because of a reason. We want to know what's going to happen before it happens on the chart, because that's how we're going to be able to trade it. I want to know right now if I could, if Wish shows us it's going to go down to 560 print line, I need to know up here. Once it gets to 560, I'm too late. There's absolutely nothing, nothing I could do about it. Okay, so well, that's one of the things that we have to understand is not only ourselves, but a retail mindset. And guess what the easiest way to understand what a retail mindset is? Think about yourself. Well, the chart's going to show you things, but you need to understand what's actually happening there. Think about yourself when you first started trading, or if you're in the beginning of your trading career. Think about the dumb things that you do, because we all do dumb things. I've never met someone that just all of a sudden they had a platform and they started trading successfully. It just doesn't exist. It's impossible because it's not a coin flip. I was talking about that with someone yesterday. Okay, you would think that if either you go long or short in a stock, that you're either going to make money or you're going to lose money, but it should be about a coin flip, right? Okay, but it's not, because what the way that it goes, they're setting you up. So when you think it's a trade in the beginning of your trading career, it's really not. And that's where we get into understanding the market maker's mindset. And I want to use what's it called, NVAX for this for today. So market maker mindset comes back to the rules, the 1 through 4 trades. Okay, understanding if we have ask prints. Okay, what is so let's break down. Okay, ask prints and bid prints. So market maker mindset is told to us through bigger bursts of prints. For instance, like these bid prints here at 140. Okay, so these bid prints here at 140. Okay, we started our morning off of what prints? Okay, this beautiful trade that went just exactly how it said it was going to go. What prints did we start our day off of? 124 bids, beautiful bid prints, right? So what do bid prints tell us? Well, first, in order to understand how a market maker is actually trading, we have to understand what the print personality is. What a print personality just tells us what an average market maker position is going to be. Okay, but when we see bid prints, what is that actually telling us? What is the market maker now telling us? It's telling us the overall move, right? At eventually, in some point in the future, they are going to make money off of that to the downside, right? Because bid prints mean selling, okay, which it could either be shorting or actually selling. If they're selling, it means they don't think it's going up, that much anymore. Okay, if they're shorting, they're looking for it to. So it tells us direction, the future intention of where the stock is going to go. Okay, ask prints are basically the exact same thing, except the opposite. So not the exact same thing, but okay, ask prints are telling us at some point in the future, they expect a stock to go up. It's as simple as we can put it, right? So now let's get a little bit more advanced. Now, as we know, when we see nice bid prints come into a stock, okay, it tells us the stock is going to go up first. What is the psychology behind that? What is the psychology behind bid prints having to go up first? Yep, to build. Because when a market maker shows us something, do they want to show us all of it at once? Does the market maker want to show us all at once? No, of course they don't. Because if they showed it all at once, what would end up happening? What would happen when a market maker shows us something at once? Why don't they do that? Yeah, everyone, they won't be able to get enough shares because everyone's going to start following it and they're not going to be able to play the game. They're not going to be able to take out retail. Okay, 90% of a market maker's day is pretty much taking away money from retail traders. Okay, so everybody would know. So they're going to show us that tip of the iceberg. So this is such a great example, and I want you to just to understand the psychology. So we started off this morning off 124 bid prints. Now, that tells us, okay, we had about 5 prints, I believe it was. I have 5 prints, all right? So in this stock, okay, from this morning when we were looking at the chart, we knew we were going to have a real big range today, right? Just based off of what we saw, based off the amount of volume in comparison to what it typically would trade. We knew that we were going to have a very large range coming into the stock. So 5 bid prints tells us what? If they did this in the pre-market, 5 bid prints tells us what? Because if you remember, during the pre-market, we'd get maybe 1 or 2 prints here or there. Print personality, at most, you could say would be 2. So why would it be a quick pull-up? No, because it's not going to be a quick pull-up. It's going to take a while. And when I say take a while, okay, it's we were looking for a monetary amount for it to go up. But we also know, are they going to build a large amount from that position if that's only the tip of the iceberg? Because if you go back to this morning's meeting, and you actually look at what we said, first, before those prints came in, I went off and NVAX and said, I have no idea what's going to happen yet. And then all of a sudden, right before we were about to finish, I saw out of the corner of my eye that it had those huge bid prints that came in, and all of a sudden that gave us a trade. Okay, so what we know is they're going to build big to the upside, and then they're going to bring it back down to those, to those 124 prints. Now I have to start to go behind the psychology of what's going to happen. And once again, when I need to know market maker psychology, where do I go? And I need to know, I go to the tape. Time and sales is where I'm going to be able to now understand the future game plan. Because at the end of the day, do we have an idea, okay, based off of certain variables, but do we ever know how long and how high a market maker will build for? Just off one set of prints. So those original 124 prints. Not really. Especially considering this morning, we knew it was going to have a huge range, but did we really know the increments it was going to trade in yet? We could take a guess, but we didn't really know yet. So then what happened this morning is beautiful. This, exactly what we said, beautiful trigger to the upside, big move up. Now, what happened during this move up? What happened during that move up? It was all buying. Or you could call it covering, you could call it buying, whichever, it doesn't really matter. Either way, it's still going to affect it the same. Okay, but all buying. So now, what's the reason that this stock is going up right now? What was the reason that the stock was going up this morning when we were trading it? Why didn't it just collapse down underneath 124? Yeah, because they were building. Okay, it was going up. So we have to understand this entire move up was building because we're following the prints we have at 124. Everything else that we're interpreting is coming from that one market maker because that was the dominant market maker at the time, right? So everything that we saw, we're now interpreting from that person because that's the person we're following. So if the only point of the stock going up at this moment is to build and we see no selling coming in, what is that telling us? What's now the psychology of the person sitting behind the other computer, the guy that was in at 124? What is that telling us? The whole reason of the stock going up is to build, but we don't see any actual selling. What does that tell us about the stock? More room up. Someone asked this morning, doesn't it have to come below 124? First of all, no stock ever needs to do anything. It technically can do whatever the hell it wants. But overall, yes, by the rules say at some point it's going to have to come down below 124. But we have to understand something is that if they want to build up to 260 and then bring it down, can they do that? Yeah, they can do whatever the hell they want. Again, we can make a generalized assumption based off the amount of prints and the increments that the stock is trading of where it should go around. But really, when we make that number, that's the number it needs to get to for it to be acceptable. I believe we were talking about 128 this morning just because it was, a nice little resistance point here. You could see it was definitely a little bit of consolidation. They did a little bit there. So that at 128, it would be acceptable to take a trigger down. But does that mean that it can't go up again to 150 first off those 124 prints before we end up coming back towards the downside? It absolutely can. So what we have to understand is once we're following this person right here at 124, okay, everything else we need to start to go over to our tape and start to understand the psychology behind it. Because if a stock triggers without any selling, and I said it this morning when somebody asked that it has been nothing but buying on the bigger side of things. Okay, if the stock has not seen, we've seen no selling into it, is that going to be a high percent trigger to the downside? It's not, because the psychology behind the person at 124 was they're going up to build. If they're not building, any type of move to that downside doesn't really mean anything. And that's where we know understanding the person behind the other side of the computer really gives us the advantage of understanding what a false trigger is going to look like. There's just nothing there. And as you can see, we got some of these. This was the first one. Okay, that happened right here, and I saw how easy it would have been for somebody to get burnt on it. This move to this bar right here. Okay, right there at 938, because all of a sudden it made that beautiful price action move with volume coming towards the downside. But if there's no selling, how could that be a trigger? So in that case, was it by definition, was it a trigger? Does it fit the definition of a trigger? It fits the definition, right? It's higher volume and price action, so it fits. But was it? Was it a trigger? Remember, price action and volume, in order to be a trigger, it has to have price action and volume, but not all price action and volume is a trigger. So do you see how understanding the psychology of the market maker would have stopped us from taking a hit on this trade? We never would have been able to get in. Well, we never did get it. We should never have got it because there was nothing. So if they don't show me, if it doesn't fit the psychology behind why it's going up, it's not time for it to go down yet. Now, guess what? If we saw selling that was coming in as the stock was going up, would that change everything of where our expectations of the stock going is? 100%. So just because we have prints at 124 doesn't mean, okay, the stock gets up to a certain point, it triggers down, and I can take that trade, because we have to interpret everything else that's happening through the eyes of that one person. Okay, I'm still thinking about the person at 124 because they came in at a time where the difficulty of trade, everything there. So this is another great example right here. We see bid prints at 140. Does the stock need to pull up from 140 first? So we should still expect a little bit of a pull-up from there, but it doesn't have to follow the right now it's trading in basically $5 increments. It doesn't have to pull up $5 because this amount of prints would warrant a $5 pull-up, wouldn't it? But when we actually follow this game plan, this whole move up was to build to come back down to 124. So when we see this selling coming in, even though it's a very large amount, okay, so they're still controlling prints, but this is still everything we interpret is from the person we're following. Who are we following from this morning? 124. That doesn't change because this entire move to the upside was because of that one person. So they've built that much. It's acceptable for the stock to not pull up from 140 here. Do you see how that works? So again, you can be a great trader just following the rules for 1 through 4 trades. In this case, you just wouldn't be in the trade right now because it didn't pull up from 140 to down. But do you see about how I actually understand the psychology behind this stuff? You could become an elite trader, okay, versus a successful one. Do you see why psychology coming in changes everything? Is everyone getting that picture? And this is, like I said, this is what our class is going, our classes this upcoming round are going to be all about, is understanding what's happening at a mental level. The person behind the actual computer itself, not just numbers, not just saying, oh, I can't trade this because the stock didn't come down to 124 yet. You understand? Secondary set of controlling prints don't need as much of a pull. No, that's nothing. No. That has absolutely nothing to do with being secondary set of controlling prints. Controlling prints need to follow, but the psychology behind what's going on in this stock and what happened this morning changed everything that we just saw there. Do you understand? So at no point, okay, does this stock, if this stock just continues to keep coming down, at no point does it need to go above 140 first to then come back down, because of how much they've already built from the original movement. Do you understand? Yeah, but that secondary set of controlling prints has nothing to do with it. It has to do with what happened earlier this morning. And these aren't I mean, this stock has had 30 different. So you can't say, okay, the secondary ones don't need to do as much, because no matter what, controlling prints need to do what they say they're doing, unless it's something else happened that makes sense for it not to have to do that. And in this case, that something else has happened. Do you understand? Okay. Because in this case, let's say I just pulled this stock up right now. I didn't see it this morning. I have no idea what's going on. Okay. At 140, I see those bid prints. Okay. Does the stock have to pull up before I can trade it to the downside? 100%. If it doesn't do that, I don't trade it. I don't care if this stock moves all the way down to 120 right now. I can't trade it because it doesn't fit the rules. But when you have when you know exactly what happened, and we know the original person that started this stock this morning, the original market maker. And that story comes into play big time, especially on a stock that has traded 26, has a range of $26. And that's just from high to low. If you really think about it, it's moved for $26, and then from the highs here at 147.50, it's moved all the way back down here. So it's traded a lot more, a lot more swings than $26, but from the high to the low, you see what I mean? So this type of stock, it's not an exception, because it's doing exactly, that's what I mean. It's not a hard trade. Okay, it's just an exception of volume and range. But the prints themselves are doing exactly what they're telling us. Okay, and it's just, it comes back down to understanding, first of all, we got to, let's recap. So first of all, we have to have a trading methodology. Without something we can set up a game plan, you cannot be a successful trader. It's just never going to happen, because otherwise you're just looking at charts. And as we discussed in the psychology of retail, if you're just looking at charts, do you have a chance? Nope, not at all. Okay. So first of all, we have to understand our trade. Then our personal psychology, who we are as a person, we have to develop a plan to gradually change that. Because what's going to happen if we try to change it all at once? If we just try to be patient, act like a robot, don't have emotion, we're going to fail, because that's not going to happen. You can't just, you've lived your entire life up to a point. You can't just say, I don't have emotion. It's not going to happen. You have to build things, those fail safes, as part of your trading plan. And like I said, it doesn't last. You don't have to do it forever. But during your learning phases, are you there to make money when you're learning how to do this? Are you there to make money when you're learning how to do this? No. Now, that doesn't mean just do it on sim account, because guess what? Someone said earlier, best way to have no emotions is go trade on sim. It needs to be live, because otherwise you're really not developing anything, because it's just that, it's a simulation. Okay. Then we have to understand retail psychology, which is, again, understanding where spots on the chart would make the most sense for market makers to take their money away. And then understanding the market maker psychology. Okay. Where do we go for? Where do we go for a market maker psychology? How do we find it? Time and sales, straight to the tape. Okay, where can we see retail psychology? Chart and somewhere else. Mostly the chart's the easiest way to go about it, but there's another way. Right here. Time and sales. Time and sales. When you see these zeros and hundreds coming in, who is it? In certain stocks, if you start to see, big bursts of zeros and hundreds when there's enough of a print personality, okay, where market makers can go out there and they can actually print bigger print, because don't get caught up in that. Sometimes if a stock has like a print personality of 1, okay, a lot of what market makers are going to do are going to show up in these zeros 100. But if the market makers, the print personality is like 4, 3, 4, 5, or higher than that, and you see bursts of zeros and ones, are those market makers? No, more than likely they're retail. So we can see retail here, which is easier, okay, but we also see it right here. Okay, if you trade 100 shares, what's going to come up on my time and sales right here? A 1, 100 shares. It's going to show me right there. All right, guys, does this all make sense? Do we have any questions? Like I said, this is kind of a lead up into our classes coming up next week. So one of the things that I definitely, for your homework would do is start thinking about yourself, go through your journal, see the things that you're doing, and set your fail safes up. Because otherwise, if you don't change them and you keep just trying to force yourself to be patient without actually putting a plan in place, it's not going to happen. All right, guys, I'll talk to everyone in the chat, and happy trading.